Hey there, traders. Todd Gordon here. Traders and investors. Todd Gordon with New Age Wealth Advisors. Welcome to, I'm calling this Friday with Flash Crash. That's kind of my old name. Old Fast Money name when I was on the Fast Money desk for a while. I thought I'd just do a little Friday close. We had a lot of fun with my partner Ryan yesterday. He had to get out of here. He had some things going on at home, so he was on a tight schedule. It's so much to talk about. A few things that I just wanted to catch up with you guys on here Friday afternoon. Maybe take some questions. My wife will be in here in about 12 to 13 minutes to yell at me because we're supposed to be going down to her parents in New Jersey. So I'm going to be in trouble, but we'll pull her in. The other fun news, I don't know where you guys live. I mean, we're kind of, we're like a little bit north of Albany, New York, which is the capital. And, we're probably, 45 minutes north. So we're in the kind of they call it the foothills of the Adirondacks. But laying in bed, I don't know if you guys have the Ring camera. I don't know if this is going to pop up. But we got an alert that there's a bear in the neighborhood. So let me just pull this over. This was... So you could see it right there. It just walked in and like our house is there and the bear was like right there. So I just showed everywhere I live. I don't care. So it was like right there. It's like, oh, cool. There's a bear in the backyard. Anyway, that's fun. All right. So let me just make sure everyone's good. Guys, can you hear me okay? Looks like we're rolling. So a few things that I wanted to talk about here. This is going to be a little bit scattered. I want to hit like 4 or 5 different topics, including I want to talk about the cannabis stocks that are we're going to the floor. I think it's Monday or Tuesday next week. Look at the chart there. I want to talk about the growth stock led recovery, specifically semis. Really interesting after NVIDIA's Investor Day. Sort of a delayed reaction, was up like 9.5% the day after. Talk about crypto and where I kind of feel about that. I was on CNBC Wednesday, talk about Facebook. We hold it in our growth portfolio. I'm looking to cut it, and I'll show you where we're going to cut it. I also want to talk about a chart that I was working on with the yield spread. And there's so much talk about where yields are with all the spreads between the different maturities. I want to look at something very short term, Fed funds and 2-year rate, and then I want to talk about crude S&P analogy from the first Gulf War to where we are now. So I have a lot to do before my wife comes in and yells at me, which is pretty typical. All right, so let's start here. Let me bring over, I'll just start with the chart, hit you to start here with cannabis. So again, they're going to the floor. Let me just pull this over here. So, this is the second vote of this MORE. It's like the marijuana opportunity, reinvestment, expungement, something or other. So it's written by the Judiciary Committee Chairman, Jerry Nadler, and it would basically remove cannabis from the list of federally controlled substances. So as far as I understand, that takes it off of being a Schedule 1A. I'm not an expert in it, but this is the second. Effort that's required before we go to the Senate. Whether to pass, don't know. But I always like to, when I don't understand the fundamentals of something, love to go to the charts because there's so much in the charts. So you just look at the MJ ETF, and what a beautiful 5-wave move down here in 2021. Okay, so. Not getting too much into the weeds with this, but, any good trend that is complete and worthy of at least a 3-wave retracement should have 5 prior waves. So it's 1, 2, and usually your third wave, which is right here, breaks down into 5 smaller waves. Same deal here. Wave 3 breaks into five smaller waves. Oh, that's interesting. I would actually adjust that to something like that, but that's okay. So it looks pretty good, and then we broke up through wave 4 resistance. So you got to think we should be able to get up, towards the area of the higher degree fourth, or sorry, it'd be a lesser degree fourth at 15. So I'm interested. I'm certainly interested in that. So we'll look at a couple names like Tilray and CGC, and yeah, there could be some good movement there. And man, these things have been absolutely decimated. Tilray's looking good too. So that's all I really want to say on that one. I do want to talk about semis as well. And if you guys have questions, throw them in there. How you guys doing this afternoon? Happy Friday. So I threw a video up also sort of on the Elliott Wave track, which I've kind of said I'm going in the closet on Elliott. I'm like, I love it. I've handed it off to my team at Trading Analysis. Like, I'm tired of teaching it, tired of defending it, tired of trying to correct people who spend 2 hours with it and screw it up. I mean, I'll forever do it, and it's always going to be part of my arsenal, but I'm just tired of it. I mean, I love it, but I just don't want to have to explain it anymore. But so I did a video here in looking at the semis back here on March 11th, and if we look at the chart, I was just kind of talking about all the extreme pessimism that was in the market here. Oh shoot, 2 weeks ago. Let me show you the chart. Okay, there it is right here. Let me blow it up. With all the extreme pessimism that happened in the market, the price structure was very sloppy, and it was losing momentum. It was losing volume. The characteristics of the price decline at new lows here in the semis did not match up with the dynamics of the market, again, with the sentiment and just with the information flow that was massively, massively negative. So, the semis have made a really nice move back. So this chart is a daily, and here's what actually happened on that chart. So we held like the 235, 240 level. Let me just see, what was the low that we gave in there? I can't even see that far. Like 240-ish in there. Nice little A equals C move right there. That's a pretty typical kind of A, B, C correction. It's the most basic form of correction with momentum divergence. Like, I hate to say it, like it wasn't actually, it wasn't hard to see. It's a very textbook correction, and to see semis coming back, like I love it. I love seeing growth come back, and if you were on the live stream last night, we kind of, I hate to say, we kind of took a victory lap because we did rebalance the portfolios in February. And I wrote on the website that I do think we're going to be coming to a low, and I bet you growth is gonna come back. So we did up our growth exposure in one of the two portfolios. We were already very overweight growth in the sort of we call it the New Age Alpha portfolio, but the dividend value portfolio, we upped tech exposure there. So I think it's, so far the market has really shaken out a lot of people. It reached extreme low sentiment readings, combined with good solid technical pullbacks like in Tesla and Apple, and you're seeing the response here. It's amazing, and the big question obviously is with rates doing what they're doing, with inflation at such high levels, how can not only the stock market recover, but how can growth stocks and tech be doing so well? So if you look at today, let's take a look at what's happening. It's even better. Like, the NASDAQ was down more significantly than this. It's only down a 0.25% now. S&P's up, Dow's up, RUT's up a little bit, and even we have Natty Gas up 3%. RBOB, which is your gasoline, up 2%, and rates are just spiking, absolutely spiking. So, the market is settling into a new normal. I mean, it's almost like the market is happy that we have normal. I think inflation will moderate. I think I was just chatting in the room over at Trading Analysis, the company I founded before this, and I think we're still a capitalist society, and I don't think that because demand is so high, I just refuse to believe that the supply curve won't come up underneath it and supply chain issues will ease. I gave credit to Tom Lee, really good point he made on CNBC. He said, look, borrowing costs are still below the rate of inflation. So if corporates are borrowing at 3%, but your loan is being inflated by 7%, you're ahead 4% on that. You're actually making money to borrow. So that results in investment and PE expansion. Again, I think that supply curve will come up to meet demand. I just refuse to believe that there's anything else happening. This is not a demand-driven recession. This started off as a man-made recession that the Fed did, and now we're moving into more supply chain issues. So let me just settle this back in here. Okay. So, sorry, Optima goes crazy when I don't put things back. Okay, so let's talk about NVIDIA. Speaking of, I'll pull that chart out here. Let's give me 1 sec. I'm doing this live, obviously. Okay, so just look at the longer term of NVIDIA. I mean, just, uptrend that's, pretty much the definition of insanity. Unbelievable uptrend. They just came off their investor day, and the pullback has been, I think, very, very corrective. So we came into sort of a triple bottom here, moved up. We really need to clear up here through 283 to 311. We hold a good percent of NVIDIA in our growth portfolio, and I thought the investor day was really interesting 2 days ago, and there was sort of a delayed reaction to it, which was surprising. So really, really strong move back up, and the implications for AR and VR are unbelievable. I think absolutely that's where the future is headed. I think there's just opportunities in so many different respects with driverless cars, as I said, with AR, VR, the Omniverse. They're a one-stop shop for anything in the chip space. And I think Facebook is going to need some real help from some of the big players if they're going to realize their vision of going into Meta. So let's just take a look. Let's take a look at Facebook. I did Facebook on CNBC 2 days ago, and let me just pull this up here. The fundamentals of Facebook are pretty impressive, okay? They have a ton of cash on the balance sheet. They have I think it's like 17 billion on the balance sheet. They're still a $587 billion market cap company. The way they're sort of valued. So those of you who don't know how to do forward earnings, so markets. Let me just pull this over here. Markets are expecting them EPS right now. I can show you on wide charts here. Markets are expecting them to make. I'm just looking at my notes. $13.73 EPS, earnings per share, in 23. So you divide that by current market price, FB. There's my wife yelling at me right now. Facebook price right now is divided by 220. Calculator. 220 divided by 13.73. It's going to be like 16 times forward earnings. And this was yesterday. It was less than that. So, the S&P is trading at 18 times earnings. So Facebook is actually cheaper than the S&P right now. It's pretty unbelievable. So, what are we going to do with this stock? We launched in October, and it was in the portfolio, and we've been gradually scaling back. We started at about a 2.15% position, scaled it back to a little bit less than 1.5, rebounds again down to 1, and I'll show you what we're going to do with the stock. But again, just talking about the company, it's still incredibly strong on the financials. So the margins are massive. They're running like 80% margins compared to the communication industry. It's like 57%. Their earnings growth, EPS growth, above 30%. They've got crazy free cash flow. Balance sheet, they got a ton of money. So they're gonna buy companies, and I think they've bought a handful of companies that are gonna help them get into the AR/VR. But the problem is, the FTC is all over them for the privacy issues they had in the traditional Facebook model. Is that gonna carry forward in the metaverse? And there's already stories about women being stalked and improperly treated in the metaverse. This is like the last thing Facebook needs. So it's tough to decide what to do with Facebook. So I'll tell you, I'll show you what I'm doing pretty much on Facebook. If we get below 185, I'm going to cut it. And it's very simple, little technical pattern here in Facebook. So really, for me, if we get back below the lows here at 186, this is last-ditch effort, the 78% retracement. So this is a little technical, but if we head back to the lows, I have a feeling we're not going to double bottom, we're going to break through. And I have no more interest in being in Facebook. So a lot of people have asked me, what's your opinion on Facebook? I have a little token piece, and I'm happy to cut it. Certainly would come back and revisit. Okay? And if you guys have questions, definitely throw them in there here. I'm just kind of hitting all these topic points. So I want to do SMH, NVIDIA. Oh, here's another one I wanted to talk about. Let's go back to SMH and cryptos. I was just talking to the trading analysis team about this. So let me just go SMH. Sorry. I had it ready to go. Oh, there it is. Okay. So discussion here is, is Bitcoin... I got a good question earlier. Is Bitcoin part of your holdings and wealth management business? And no, not right now, just because we don't have the technology that's available for us to plug into our custody, which is Schwab. So we've talked to two companies. My partner Ryan and I have talked to two companies who are trying to build the technology to speak to Charles Schwab. Come here. You want to come in, Brody? We're on YouTube. You want to say hi?
Hi.
Come on in, B. Tell them what's going on, bud. We're on YouTube right now.
I just came in to tell my dad that we gotta leave, like, right now or something.
He's been sick. He's had a cough forever. Okay. I'll be right there, I promise.
Okay. Dad, you gotta go.
Okay. Sorry. So back to Bitcoin. Look, I think crypto has had the opportunity to be the inflation hedge that it was sort of pitched to us as, and I think it's clearly failed. Related to the last point about NVIDIA and the growth trade and semis, I think it's clearly trading right now like a currency of the new virtual augmented omniverse world. It's going to be crypto in some form will be the medium of exchange once we do take our lives more fully online. And the strength that we've seen in semis, I think, is a clear leading indicator. It's not for driverless cars or connected cities, all this. I think the incessant bid that we've seen in semis is ahead of this. And looking at the correlation here with semis and Bitcoin, is there any argument? They're trading together. I think crypto and specifically Bitcoin and Ethereum, they're trading as risk assets, not inflation hedges. Okay, they're trading as risk assets. So if they're part of your portfolio, just keep in mind they need to be considered just right alongside NVIDIA. Okay, it's trading for the same purpose. But one thing that I do want to distinguish is, we're still in our portfolios heavily overweight relative to the S&P benchmark. The inflation-sensitive sectors like energy and financials, materials. We don't have as much materials as I wish we did. I mean, you look at XLB right here. I mean, having an amazing day. Mosaic, Avery, Sealed Air, Mark Marietta, CF Industries. These guys are all leading the XLB, which is the materials ETF. So, I think it's time to start, and we're already doing this, kind of rotating back into growth as the market settles back into the idea, or not settles in, gets used to the idea of more normal interest rates and inflation that is running, not consistently above or below the Fed's target. So I don't know. I think the market is handling this extremely, extremely well. All right, let me keep moving. I got a few more things that I want to hit for you. Okay, Fed funds and 2-year rate. This chart, I think I dropped it on Twitter and nobody responded at all. I don't know if it was too much or if it was too confusing. Let me pull it up here. So what we're looking at here is there's a lot going on in this chart. So what you have here is, okay, in blue or in purple is the 2-year Treasury yield. And this is the yield that everyone is talking about. They're saying this is the federal funds rate. Okay, wherever the 2-year goes, this is where we're going. And everyone's looking at the 10-year spread minus the 2-year spread. And as it's narrowing, everyone's saying, oh, recession's coming because the 2-year is moving up faster than the 10-year. And there's more to it than that. And I've been tweeting and talking about that you have to look below the 2-year down to the 9-month, 6-month, 3-month yields. And it's actually telling a different story. Kelly Evans wrote about it. I talked about with her on CNBC. I kind of mentioned that. And then in the last 3 or 4 days, it's starting to be more talked about. So what I did is said, okay, well, let's look at the effective Fed funds rate, which is your 30-day, 30-day to 3-month, which is basically where the Fed sets rates every time they get together on FOMC day, and look at the spread between that and the 2-year Treasury. And what I found was kind of interesting. So you look at the spread. So 2-year is ripping up to 2.13%, but federal funds is still down at, quarter to a half, right? And they're going to go up, another quarter to a half here in May. Well, the spread is up to 1.8%. And I was like, what happened the last time the spread between 2s and 30-day was so wide? And there was 2 noticeable points. One was back here. This was in 2004 when we got up to 1.95. And what happened was the 2-year moved up, and then the federal funds followed behind it as the Fed hiked rates coming out of the 2003 market low. And I remember day trading that with Enron and WorldCom, and that was crazy. I remember that. But what was interesting is the NASDAQ continued to rally for like another 4 or 5 years as the Fed was hiking rates. The other one that was really interesting was back here in 2002. And the 2-year really tried to rip up. Federal funds, the Fed didn't hike behind the 2-year. And it created a really wide spread at 2.09%. And eventually the 2-year caught back down. The yield caught back down federal funds. NASDAQ bottomed. NASDAQ bottomed 5 months later. I mean, it lost a pretty good percent, but it sold off another 5 months. And then that was the NASDAQ low. And then we've done that ever since. Granted, it was a different time. We were in 2002, was the disinflationary tech bubble pop. But what was also interesting is CPI bottomed right about here. And CPI began to move up as well. So I'm only making the point that you can't say with certainty that that federal funds always follows the 2s, because it didn't here at all. And it got to 2.09% spread, and the 2-year caught back down. So take from that what you will. I just think it's noteworthy. The other thing I wanted to throw out there, sort of on a macro, and then if you have any questions, throw them in there, is this. I was going to do this last night in the live stream and didn't. So, I had this ready to go yesterday. Didn't do anything. Just thinking about the first Gulf War and kind of what happened. So we have WTI in blue, crude, and the S&P in red. So in August of 90, Iraq invades Kuwait. The S&P sells off right here as crude oil just rips, okay, on the right scale from 17 to 40. And if you look at it in 2022 dollars, I can't even imagine, you know, this was 32 years ago. It's probably 150, 180 dollars. So amazing move up in crude oil. S&P sells off, and then October 90, U.S. military planners begin an offensive, and I got these from Encyclopedia Britannica on the website. So thanks to them. So they begin to plan an offense here in October. Market begins to skid into a low. Crude oil is obviously topping. November 90, UN Security Council issues Resolution 678 calling for use of all necessary means, a few more efforts, and then finally, this was right here, had a little bit of sell-off. I don't know what that setback was here in the S&P, a little rally in the crude market. But finally, in January 91, the U.S. allies launched air missiles and attack, and that was absolutely the buying point in the S&P. Crude actually did follow back, but then sold off to new lows. So, you know, if it escalates with China, or escalates with Russia, China does not get involved, which I don't feel they will. I don't think economically they can do it. They can see the sanctions that would come down on them, and you know, frankly, they don't produce their own semiconductors. You know, if they ever stepped into it with Taiwan, I'm going to have a hard time believing they're going to get any supply from Taiwan Semiconductor. They don't supply their own cars. I think the sanctions would be devastating on them, and I don't think they're going to step in. So I think Russia is standing alone. It's you know, it's atrocious what's happening over there, but I think they are going to stand alone and try to rebuild the USSR, and hopefully it doesn't go into the other peripheral countries. A lot of debate going on there, and we have a guy who works for us at Trade Analysis who's in Kiev. He's fled, but his dad is there, and he's worked with me for 5 years. He's one of the sweetest guys. If you ever had customer service or called or spoke to him, you spoke to Nick, and he's in Ukraine. I love him. All right, so anyways, back to where we are now. So here's crude and the S&P right now. S&P in red right here, crude in blue, so kind of a similar situation. I can't help but think if this thing escalates and somehow a NATO country is impacted, like Latvia or Poland, obviously Poland, but there's a few neighboring NATO countries, I can't help but think if we do get involved, a similar situation might be happening is here, right about there, you know, God willing on that one. So those are pretty much the points I just want to throw at you. I know there was a lot going on there, but if there's any questions. Kirk, you have bears in your neighborhood. Where are you? Hey, Gerard. Mohammed, what's up? What should Tilray do for you to buy it? I'm not going to get in the one right now. I'm also a bear because I like to short. Maybe it's time to take one more. Oh boy. Yeah, TLT could be a similar kind of thing. You know, I think the 30-year, 30. My charts are all over after a live stream. My stuff is just everywhere. Let me just pull up a quick. Stuff's blown up. All right, so here is the here's the 30-year yield, and just kind of looking. I mean, this is, you know, this is a nasty. Certainly, you could almost make the argument of an inverse head and shoulders. There's the breakout. I still do think we are below trendline resistance here. In the 30, clearly below trendline resistance in the 30. How about the 10-year? And this is on a log scale. Very important to look at log. And then, you know, so, I mean, you have resistance at about, call it at that rate, like 305 in the 30-year. I think that's going to be, sorry, that's a bad trend line. I've only been doing technicals for 25 years. I don't know how to draw trend lines. Yeah, right around 3. 3, ironically, in the 30 year is going to be resistance, and then go into the 10-year because the TLT represents 20 plus U.S. Long-term treasuries. So, come on. This is not my regular charting software. So let's see. We're obviously through resistance here. Again, it's going to be hard to say. Oh, that's terrible. It only goes back 10 years. That's no good. So it's going to be 3% in the 30. This one is through resistance. It's going to be really hard. I don't know if I'm rushing out to buy TLT or treasuries or add fixed income to our portfolios for our clients. I think we are getting used to a regime of higher rates, and I think the market is digesting it well so far. We'll see if it pushes us into recession. Maybe it'll be a very quick recession when you come in and out of. But the way this market is trading, I just feel that the market is comfortable with this sort of readjustment, recalibration to normal rates and inflationary readings. So we'll see for now. I'm certainly not a perma bull. We could go to cash if we need to, or we're not going to sit by in a sustained bear market, but it acts well. So all right, I'm going to leave it there. My wife's going to kill me. So have a great Friday. We'll be doing more of these. Let me know what you'd like to see. And I'm sorry if I didn't answer your questions. Trying to rip through this. So guys, have a great one. Have a good weekend, and see you next week.